I think we got too comfortable with finance and we're like, this is ours, or kuch nahi karenge types. So I remember the first analytics edition of Sector was fighting everybody tooth or nail, including my own head. Like, why do we need it? Finance is big enough. We have the expertise. What do we know about analytics and so on and so forth? That velocity of change in the last 3-4 years has been much better. We used to get this criticism a lot, specifically from sort of the founding community, that offline education cannot scale and you should go online and so on and so forth. I mean, in hindsight, it was great advice not to listen in some senses and keep building it out. The one large reason we actually stuck to the offline way was because we saw decent outcomes in our placement-focused programs.
Welcome everyone to the 136th episode of Founders Unfiltered. I'm your host Mazin. We have been running this podcast for over 5 years now, and the goal has always been simple: unscripted, honest conversations with Indian founders about what it really takes to build a company. We've always focused on the messy, unique, and often surprising process that goes into building for India. Today's guest is building one of the most enduring edtech companies in the country, one that's reimagining how professionals across India learn, upskill, and grow their careers. Nikhil is the founder of Imarticus Learning, a full-stack professional education platform that's trained over 1 million learners and placed 75,000 students. And incredibly, it stayed profitable for nearly a decade, in a sector where many of its peers have scaled fast and burnt out faster. Their story is especially relevant now as the company gears up for a 750 crore IPO. The company is proving that sustainable, outcome-driven edtech companies can be both profitable and built to last. Nikhil, it's so great to have you here. Welcome to the show. Really looking forward to chatting.
Thank you so much. Thank you for the invite.
All right, so let's jump into the rapid fire. What's on your bucket list?
That's really rapid fire, really quickly. What's on my bucket list?
Personally, right? Like something that you've always wanted to do.
Yeah. I think one of the things that has been on my bucket fire for a long time. One thing after Lehman, I used to work for investment banking, and then I moved into Imarticus Learning. So one big thing on my bucket fire was to take a 6-month vacation and learn surfing in Spanish. So I took that one big one.
Nice. That's a good one.
I want another break of 6 to 12 months, etc. At some point, that's a big bucket piece, etc. Maybe a little bit more, maybe learn another language or go somewhere else, etc. That's on the bucket fire.
And where did you do this? Where did you...
It's actually up and down the coast of Spain. So
Amazing.
I learned to speak Spanish, and then I tried to hand at surfing, which I sucked at, but that's it.
Definitely. Pretty cool bucket list. Who has shaped your thinking recently?
Not even recently. For a while, a business, Mr. Ratan Tata, who had the pleasure of having a few meetings, has shaped sort of, how I think about business and how impactful businesses can have great outcomes. Is something that sort of, people tell you should create good businesses, and in the end, they'll become profitable for you. Yes, gyan milta hai, but particularly, but actually in action, how the Tatas do it, it's actually quite cool to see. So I think that's been a sort of a always list for me to look at how they have built businesses, what they do and what they don't do. And it's one of the things, right? It's like the obvious thing. Yeah, you should do good, and therefore you will have good businesses. But it's not very obvious. It's not, and the way to do it is actually a little bit more different than what people normally think about it.
Nice. No, that's a good one. If you had to build a startup today outside of your current industry, what would it be and why?
I'd build like a political type of startup, like something around political, a political platform or a political marketplace, if you will, etc. Like from a ground up type of thing, anything that from a village to the city type of thing, etc. I personally have political aspirations in the future. So I think that would be my next. I always move towards that politics of a situation, if you will, etc. So something around politics I'd build. Difficult question how to monetize it, but second problem.
Yeah, no, fair. And what's one truth that few people agree with you on?
I think the pain in building a business, or the pain that you go through, etc., is absolutely important to actually building, either having a great life or building great businesses or etc. So the pain that you have to go through in life, particularly, whether it's through business or through your personal, if you will, etc., is sort of you come out ahead in the end of it. A lot of people don't agree with this idea. But it's,
No, I think a lot of people look for get rich quick schemes or what you going to call it. But
it's definitely a marathon, not a not a sprint.
amazing. Thank you, Nikhil. And to now dive into your journey, let's go back to the beginning. Tell us where you grew up and.
I grew up I grew up in Pune, so I spent a lot of time there with my parents, obviously. And then I did my schooling there till 8th grade. And then my father actually decided to move. My parents are US citizens, so they decided to move to the US, and we all sort of shipped, all of us, me, my sister, and my parents obviously shifted to the US when I was in 8th grade. So I sort of finished my high school, 9th grade, 10th grade in high school in the US, and then sort of continued college there. I ended up working for, first job was Lehman Brothers as a trading analyst, if you will. So did that for a while, etc. Stayed in the US for 18, 20 years after I moved from Pune, and then came back to Bombay when I was about 30, 32, 32.
Walk us through that journey. I mean, you were well established in the US. You lived there most of your adult life. What made you decide to move back to India?
So interesting story was Lehman was looking to set up in India. Lehman Brothers, which I worked for in New York for a while, for 10 years. They're looking to set up in India, and they give you one of those ridiculous expatriate packages, hardship allowance. And they said, ki India jao, banao types business, etc. I said, why not? I've never done it before. I'd actually done Hong Kong small stint out of New York, but never done India. And India was something always on my list. Never worked here, never actually went to college here. I had very, very old friends here from Pune. Always wanted to go back, etc. So came back, helped them in Bombay, and sort of helped them build that business, if you will, etc. So I think Lehman made it very easy. The money was great. I think the exposure was great. Building a sort of investment banking and sort of capital markets business in India was always on sort of a bucket list of a sort of banker who'd been in New York. So I think Lehman giving me that opportunity sort of gave me that into India. Otherwise, frankly, I wasn't thinking about coming back to India. It was something, I was doing extremely well in New York. Money was great. New York was even better. So it was, but I think more exposure to other coming back and building something in.
And so walk us through that journey, the next couple of years at Lehman and moving to India. Was it what you thought it would be? How did you go from there to a startup?
So the running joke was that, in expatriates or one of these, you have a 2-year package. Har 2 saal you have to renew your package. So I renewed it 4 times, etc. So I stayed with Lehman actually 2 times, and then Lehman went bankrupt here. So while I was here, Lehman went bankrupt. Then I ended up going bankrupt with them. Then I ended up working with a Japanese firm, sort of help make that movement for the Japanese firm to buy the India franchise. So all that thing was quite interesting. The upper, niche, both. Losing the retirement sort of bounty in Lehman, then getting some back in Nomura. But I think what was clear, and this is the transition to the startup, was after spending a bit of time in investment banking, capital markets, I had hit, if not sort of the ceiling, if you will, or close to the ceiling, but also my interest was, I wanted to do something different. This was day one job, if you will, in investment banking, capital markets. I'd moved around the firm, I'd moved around the globe, I'd worked in London for a while, I'd worked in Hong Kong, I'd helped set up India. So I was done. I wanted to do something completely different. And staying in India sort of had that entrepreneurial thing back, right? Like kuch karte hain, something of my own, something that I can touch and feel. Because with banking, the numbers are great, but you don't feel it. You do these multi-million-dollar deals, but inherently you never see it. You never get to feel it. It's like a deal done, and it's done, and you move on to the next deal. So I think we wanted to do something. I wanted to do something more impactful, something that I could see, something I could feel. And that's why we started thinking about Sonia at that particular point of time. Sonia is my sister and the co-founder of the firm. At that particular point of time, was in Singapore. She used to in management consulting. So we used to throw around. I used to be in India. She used to be in Singapore. We used to throw around ideas. Ye try karte hain, wo try karte hain. So we thought through hospitality, and we thought through education. Those 2 ventures, if you will. That's something in these 2 areas. It's something, etc. Education for us, for both of us, was very, very quick we caught on very quickly. We thought something meaningful could be made in India. the impact side of the business was very attractive. So I think that's how we thought through education a little bit.
Walk us through that trade-off a little bit. Hospitality is also obviously a huge industry. Why did you pick education?
Yeah, I think it was the idea. We were very clear in both cases. We wanted to do something which was B2C and not B2B. So it was to the consumer, the impact to the consumer. We could look and feel at the consumer, etc. So both we assessed. I remember going to a lot of, we were looking to buy some of these resorts. We went and looked at like 20 of them, etc. And then we looked at colleges. We wanted to buy universities. So we looked at universities, etc. So I saw 26 or 28 universities all around Maharashtra. And I think what resonated was it was young, it was very, very nascent in India. Now we're talking about, 13, 14 years ago. So it was very, very nascent. We thought there was something that we could do in a very infra-light way, if you will, etc. And that's how education won out very, very easily, actually. So after some time, we started that sort of a pilot, if you will, in education.
And so walk us through the early days. What did the pilot look like? Who were your first few customers? How did you guys work?
Because we both came from a little bit of financial, I came from completely financial services. Sonia also had exposure to financial services. We were clear that we wanted to make sort of an impact in an area that we understood. So financial services is an area that we had spent some time. We've hired thousands of people for our respective firms. So then we said, look, what's an asset-light way to actually get something done around financial services training? So that's what we started off with. We started off with literally, I want you to imagine an office about 2,000, 3,000 square feet with a few classrooms. And we said, we'll train and place people in financial services in a very sort of employability first type of way. And the idea was simple, that we train people, we charge them for that training. And at the end of the training, we place them in financial service firms, sort of a training and placement type of offering, if you will, etc. So here, we started off with our first unit was in Andheri in Bombay. And we, I still remember the first person's name, Rosie, her name was the first candidate, if you will, that I counseled that she should take this course and she would have a certain amount of outcomes. So I think that's what we started off the business with. And
so it was very hands-on, and you working with your first few customers.
Absolutely, very bootstrapped. We actually looked at, we both were from financial services.
Yeah, so why not go out and raise money, right?
Yeah.
You guys, it should have been easy.
Raise money, or we could have bought a few assets. Frankly, there was nothing to buy as such. There was not a lot of companies of scale that had done this meaningfully. There used to be some in IT skilling, like NIT was there, if you remember, AppTech and a few. But really, our sectors, we didn't have too much going on, particularly in financial services. So fairly ground up effort, right? I remember, like I told you, me, Sonia, 3-4 of us, etc. And then I think after the first 3-4 months, a few more of my colleagues from Lehman Brothers and Nomura and JP Morgan and a few others joined us.
From your network.
That was sort of guys who had worked with me before. They came in and said, look, we see what you're doing, we like what you're doing, etc. We'll come and join the cause. And I think that's how we sort of, the initial team of 6 to 7 people, and that's how they came through.
Walk us through that, that whole kind of founding team and how you guys approached it, because I think there's a unique dynamic here. We've had a few husband and wife duos. I don't think we've had a brother and sister founding team yet. How do you guys think about splitting up responsibilities? And it's a pretty big founding team that you ended up with later on. How did you kind of think about?
It's a good question. The founding team, I think, all of them came from investment banking and capital markets background. And I personally believe they also were going through that fatigue in their career, where investment banking had done well for a long period of time. And then if you remember, when we started the firm, which was about 2012, 2013, all this stuff was happening around financial services. So I think people were looking for different things to do, etc. And this was a sort of a meaningful, impactful venture that they saw they're getting involved. So you're absolutely right. My first year, my dad used to say this, my dad came from a traditional manufacturing unit. And he's like, why do you have so many leaders here? What are you trying to build, if you will, etc.? You have 6 guys from sort of tier 1 firms, if you will, around you. And even though these people took significant pay cuts for equity, it was still significant in terms of what we were at that particular point of time and what our revenue was. But I think what helped that team of 5 to 6 senior guys helped to scale the organization better. For example, I remember one of them moved to Bangalore, the other one moved somewhere to Delhi, and we actually built 2-3 more units of the Bombay unit very quickly. Within the end of first year, we had 4 or 5 functioning units, and we could only do that because we had senior people who were responsible and were committed to the cause. So I think that helped a lot, and also it made sort of the, while we did every job that was available like every founder, but we still had an easy ride. I would like to believe that relatively easier sort of move the first 4-5 years, etc. Going back to your question about Sonia, she does most of the work. I faff around.
But was there any clear demarcation of roles in or certain areas that you guys would own, or not really?
Now we are very clear. So she does more B2C, I'm more B2B. She does more, program. I do more product. So now it's the last 4-5 years. We've been in business for 10-11 years now. With the last 4-5 years, we're fairly clear in terms of when we don't get it. We contribute obviously, but it's funny. We used to, as much as we used to fight in our early days, we don't at all, right? I think we were done.
All the fights got out of the way.
I have stories my mother tells where we would claw each other's hair out. Literally, roots would come out of it. So I'm not sure how we went from here to now a completely sort of in sync, cordial relationship on even the most contentious issues.
Yes. And want to talk about that journey. I mean, you guys stayed profitable right from the start. Was that? I mean, obviously you came in with much more mature set of founders, but in the industry that you were in, I mean, was that a conscious decision, or how did you kind of think through it?
The running joke is that we never get money when we want to, and when we want to, nobody gives us money. So I think, but having said that, I think this idea of profitability or not burning unnecessarily, etc., has been from day one. We are not the type of founders, contrary to popular belief, that we'd go and burn and do stupid things just because we had the money in the bank. We put our own money, the first few crores, if you will, that the firm needed. And then we have raised money, but we've raised very little money. We've raised in total 20 crores only in our whole journey, if you will, etc. So I think the money never came at the right time. When we were offered the money, we weren't ready, and sometimes vice versa. But I think in hindsight, it's helped us to build something a little bit more frugal, something that mindfully we've done. We've gone into businesses. We have not done stupid things. We have exited businesses fast when they've started bleeding, if you will, etc. So sometimes not having enough money, you need to have money, but at the same time, not having too much money helps.
Fair enough. And so tell us, high level, what it is that you guys do, and maybe how it's changed over the years as well.
I'll spend a bit of time telling you what we do today, and then I'll tell you how they came about, those type of businesses. So Imarticus is a professional education platform. We sort of specialize in different domains like finance, analytics, and technology. And within these domains, we offer a diverse set of course offerings, which range from employability outcomes, which go into certification outcomes or upskilling outcomes. Our sort of thesis is that once we have chosen a domain, then we should be able to offer product offerings to the person who's in college to all the way to the CXO. And that's how we have built out our offering, whether it's in finance or analytics or technology. And then who pays for it, whether it's the consumer or it's the B2B or the academic organization, just frankly becomes incidental. So if you look at our offering today, and I'll give you a typical offering or typical sector offering. For finance, for example, we will have placement-focused programs for people who have just graduated. We will have finance-focused programs again for people who are in college, who are in their first year and second year. Then we'll have courses for people with 2 to 4 years of experience, could be CFA, ACA. And then we'll have people with experience who have 10 years plus. We have a CXO offering on how to become a CFO and so on and so forth. So it's sort of the gamut is diverse in that sense, as long as it's popular finance. Yeah. So that's what we have built it. That's how we built the offering.
And that's fascinating. I mean, it's because I'm curious, why pick such a broad spectrum, right? I mean, if you're targeting college students, it's a totally different acquisition channel versus CXOs.
Yeah.
Why kind of go that deep?
No, it's a good question. Look, for us, domain came first rather than the offering, rather than the consumer. So if you, for example, want to offer something to the college student, just offering them finance education not enough, then you got to broaden it. Our view was having domain expertise is trumps all, which means because you have the domain expertise, you should be able to have better outcomes. And if you believe in that thesis, then once you choose a domain, you have to mop up the entire offering. Because you're trying to build a larger business, etc., etc. So you can't choose a domain and a very specific offering. If you choose a domain, then mop up the whole offering. That's our thesis, if you will, etc. And again, this was built organically and slowly. So we started off with employability outcomes, and then we added upskilling, then we added sort of certifications and so on and so forth. So we started off with finance as one sector. In year 5, we added analytics as a second sector. Year 7 or 8, for example, we added technology. Now we acquired a firm recently on digital marketing. We're now close to acquiring something on the legal side. So the idea for us is to keep sort of building this portfolio and then keep adding more and more domains slowly and surely.
No, but that's quite interesting. It took you quite a few years to just build out the finance piece, and then after that, you could kind of pick up and go a bit faster to new.
I think our personal one of our learnings is also, I think we spent, while it was good to spend so much time in finance, I think our velocity of change or velocity of adding more domains needed to be faster. I think we got too comfortable with finance and we're like, this is ours, or kuch nahi karenge types. So I remember the first analytics edition of sector was fighting everybody tooth or nail, including my own head. Like, why do we need it? Finance is big enough. We have the expertise. What do we know about analytics and so on and so forth. But I think, I think that that velocity of change in the last 3-4 years has been much better. And because we have done that sometimes through acquisition. So my earlier investment banking soul has gotten up recently. We have done a few acquisitions in the last 3.5 years.
Yeah, you've done, I believe, 4 in the last 4 years. Walk us through it. What was the kind of thought process?
Look, the acquisitions, while all of them were small in size, they were not actually for revenue and EBITDA. They were mainly to add capability. In 2 of them, we've added a new domain. In one of them, through my captain, we've added digital marketing. Then we did Equation, which added more sort of technology and sort of the executive education vertical. Then we got Hero Mine of the Munjal group, which was more B2B and added sort of clients, which like FMCG clients and auto companies that were not part of our B2B offerings. So yeah, I think those 3 are the large ones, if you will, that we have done. And again, they were mainly done for, I think, either a capability or adding the team. The good news about all these acquisitions are all the founders have stayed in the last 4-5 years. And now my management team, frankly, is a bunch of entrepreneurs. So we all sit around and all of them have been ex-founders and, have built companies of their own of different sizes and different, and they've also gone through their own experiences of building companies. So I think it's a great plus in terms of looking at that.
That's amazing. Would like to talk a bit more about the team, but before that, I did want to touch a bit about the CAC. We spoke about it, but you guys have a unique offline strategy. I believe about half of your revenue comes from offline channels. Was that a deliberate decision? Obviously it was, but walk us through the decision. And
we started off with an offline business, actually, completely offline.
Yeah, it was you doing courses, right? And advising.
Bombay Center and a few other centers. We had about 9-10 centers we were doing completely offline. We used to get this criticism a lot, specifically from sort of the founding community, that offline education cannot scale and you should go online and so on and so forth. In hindsight, it was great advice not to listen in some senses and keep building it out. The one large reason we actually stuck to the offline way was because we saw decent outcomes in our placement focused programs. And we knew the outcomes we were getting was because of the offline interventions. This one number gets thrown around and it's actually the right number for us. About 10 to 12 interventions, offline interventions, it took to get someone placed. Now try doing that online. It's very, very difficult to engage someone and to complete. So I think we loved that piece of it. We love the touch and feel of the offline, highly sort of, and we were also going for premium courses. Most of our courses on an average have an ARPU of 1.5 lakhs, which is fairly expensive for India. So I think this idea of having these interventions offline and making sure the outcomes come real, that was from day one, and we have stayed true to its own to that course particularly. So we love the offline business. Today also, like you said, about 50-55% of the revenue comes from offline. We keep building our new offline centers. Last month, we opened up Indore, Ahmedabad, and our second unit in Bangalore. So we'll keep expanding our offline presence, while now 50% of the business is online. Sort of COVID came and slapped us around for that one also. The employability outcomes, I personally believe, some of my peer founders will disagree with me, is that you have to be offline.
Amazing. But going back to the acquisitions, quite different companies. How are you thinking about integrating them and making sure that you kind of have a uniform culture across the org?
Yeah, so I think, like we have about 1,000 people in the firm. About 600 of them are organic and 400 is through, 350 or so will be inorganic, if you will, from an acquisition perspective. To your point, large amount of the workforce comes through inorganic, if you will, etc. I think while we have done them close, but at the same time, we've made sure that each one is sort of integrated before we go to the next one. So I think we're not doing silly things in terms of buying 5 companies in 1 year. So I think that's one particular piece. Second is I've been fairly consistent that I want the founding team to stay. If the founding team is not interested, then frankly, we are not interested in that asset or in that business. I personally believe at the size and scale we are in these acquisitions, without the founding teams to integrate the teams is very difficult. So I think having the founders stay and sort of, frankly, run businesses, their own businesses that they were doing, but under the brand of Imarticus helps them, helps us, and helps the overall cause, if you want, etc. So I think integration, we've been, it's touch wood, but I'm definitely beating the odds in terms of integrating. And sort of, I think the odds say only 10% of acquisitions are ever successful, but it's done well for us. I think we like what they're bringing to us. In some cases, they bring, the founders are much younger than me and Sonia, so they bring a whole new level of thinking. In some areas, they've brought in new sectors and new sectoral understanding and so on and so forth. So I'd like to do more. We're looking aggressively for different types of firms, different types of founders that can come and sort of join the team.
Amazing. And, to kind of tie it all together, what are some of the key metrics or KPIs that you track and that your leadership, your broader leadership team looks at as well?
Look, other than the financial metrics, which are, normally the EBITDA, cash, and, revenue, all that type of stuff, etc. Because we are all from finance, we obsess over that particularly thing. But from a business perspective, I think, one of the large things that we track are outcomes, whether it's outcomes for employability, it's outcomes for pass rates, or it's outcomes for sort of job and career growth, if you will, etc. We actually have an outcome team. We have a team of 2 to 3 people who actually literally track outcomes for our learners. And we report that on a regular basis. We celebrate those on a regular basis. I think some of my teams get a lot more excited about somebody getting placed than actually getting that actual revenue. So, both are those. But I think the idea is to have that fine balance between financial metrics and outcome metrics. I think that's what we've been able to achieve mostly.
Nice. Yes. So, and so kind of talking more about metrics and, with you guys heading for an IPO, what are some of the things that, you need to do to get there? How are you kind of getting the company ready? Is that a big step or is it just another step in the journey?
No, it is a step in the journey, but it's a big step. I think we're doing a few things, right? One is, I think one of the things that we are looking to do is make our businesses a lot more predictable. I'm sure you know that, the IPO markets are not about how big the company is, but how predictable it is. So, and EdTech in India particularly this has been an issue. It has great years, then it goes down, then it has a shitty month and so on and so forth. I think in public markets, I frankly don't want to have bad quarter calls, if you will. So I think one is making the business a lot more predictable. And, to that, last 3 years or last 2 years, if you will, we've hit the budget 90% of the time, which is what gives me a little bit more confidence that the company is ready for public markets. The other piece, Mitch, is the compliance. It's out of control compliance. So I think we have a checklist of 167 items that sort of I have a dedicated team that's going through it. Everything from a new board to committees to and so on and so forth. So the fun part of the IPO is what the team is actively working on. But yeah, it's a big step. I think it's a way to monetize the platform. It's a way to actually get our brand out there. Earlier when we started the business, we used to have 1 or 2 courses, right? And now we have 36 courses. I think now getting the name out there through an IPO will help not only obviously the shareholders of the company, but also help the consumers of the company use the public markets to create a larger brand. I think that's one big outcome of the IPO, other than your normal sort of liquidity of the platform and so on. So getting the brand out there through sort of public market is something that we're looking forward to.
And talking about getting the brand out there, you guys have had some strong partnerships. Walk us through it. Was it coincidental that you worked towards it? And do you think partnerships are a big part of your growth going forward?
Yeah, so our view is that other than pedagogy, great learning, one of the things that we bring to the offering from a consumer perspective is the different partnerships. And our partnerships are layered. We partner with academic organizations, we partner with corporates, we partner with associations, and then obviously our one large partner is our hiring partners, people who hire from us, if you will, etc. So I think partnerships, the partnership ecosystem is central to what we bring to the consumer. And we sort of interact with them in different ways. So for example, we'll interact with the academic partner to create courses. Then we'll sort of talk to the hiring partner to ensure his hiring requirements are met. We'll partner with the likes of CFA and ACCA and associations who help us become sort of their training partners, etc. So absolutely critical to us in terms of how we sort of interact with them. We have a fairly sort of well-positioned relationship team and a business development team around partnerships. So we, like you said, is it by choice? It's very sort of concerted effort to say this is where we are looking for partnerships. This is what we're looking from those partners, and this is how it's going to impact with the consumer. So yeah, we think through that particularly in terms of quite meaningfully. And again, there are a lot of partners we have. We have close to about 55 partners, and hiring partners are close to 600 of us, 600 of them. So काफी meaningful, and they add a lot of value to our consumer set.
And talking about your consumer side, I mean, you already have 1 million learners on the platform. I believe you're targeting about 5 million learners by FY28. And of course, you need to do that in a predictable way as you go public. What are some of the biggest unlocks that need to happen to kind of make that growth happen at that scale?
Look, 2-3 of them we're spending a bit of time on. One particular one is distribution. So while, some of our peers and most of the companies have obsessed over digital acquisition, and that's why the CAC is up and so on and so forth. Almost 40% of our distribution is offline, which is through colleges and through campus connects and so on and so forth. I frankly think that needs to be even bigger. So that, one unlock that needs to happen is that 35-40% needs to go to 60-65%. Wow. So our dependence on digital acquisition,
less digital acquisition, amazing.
It just keeps getting more and more expensive.
Yeah,
so I think if you want to build a profitable, sustainable business, our acquisition channels have to be more diversified. I think that's one learning we've had over the last 2-3 years. Good progress there, but frankly, long way to go still. Right? That's one particular piece. Second unlock that we're looking to do is we are actually starting a new segment, which is in the undergraduate space. We're starting a Indian school of Imarticus School of Finance and Business, which is an undergraduate play. So now we are moving away from just the vocational education to sort of the traditional education. What we're going to go to tell consumers is don't go and do your traditional BComs and BBAs, if you will. Come and do this 3-year thing with us, which is unregulated and doesn't have degrees. And we have different solutions for that. But it's very premium, it's very industry forward, and it has great sort of experience and outcomes for you. So I think that's another big unlock for us. The first unit is we're looking to launch that in Powai. So that's the other piece. And the third piece, like I said, more acquisitions. I like what I see. I think there's a lot of companies out there, a lot of founders out there. I personally believe in India, a lot of people work very hard to build small businesses. I think if you bring them together, if you create sort of a corporate structure around it, if you will, etc., and we can learn from our strengths and weaknesses, I think we'll create larger businesses and create more value for all parties. So I think that those are the 3 areas that I'm spending time on: acquisition, School of Finance, what we call Imarticus School of Finance, and diversification of distribution.
And talking about diversification, And especially the next phase, once you go public, how do you kind of maintain this entrepreneurial spirit? You've spoken about how it's important amongst your team. How do you, keep that spirit and not become
It's it's
corporate?
definitely a challenge, right? I mean, when people come and, guys come and tell me that you're a startup, I'm like,
Not anymore. Yes.
1,000 people. Yeah, I mean, I'm not sure I want to call myself a startup. And, for example, the small things like, earlier working Saturday, Sundays was like norm, right?
Yeah.
And now doing this podcast with you on Sunday was like drawing blood from my own self. So I think, cultural fits have to change, if you will. So it's a very good question. It's not, frankly, something we have answered for ourselves. It is, I keep telling my companies, we're not Tata, telling my guys, we're not Tata Birla. Come on, long way to go. Let's go. So I think it's a struggle. As you get bigger and bigger, you put more processes and systems in place. I think you do lose some of that, call it that fire, call it that, get it done now type of thing, etc. Because I think, every move you make, it takes time and money. So I think it's a fine balance. I don't think we have achieved that, but it's a work in progress.
And I have to ask about the role of Gen AI, A, in your business, and B, in your industry, education in general. What are your thoughts? What role is it playing in your company first?
We have an AI working group that talks to two large outcomes. One is efficiencies in the company, and two is what can it do for the learner. We have about 6-7 live projects at the efficiency side and 3-4 projects on the learner side. But I see a lot of impact. On personalization of learning on the consumer side. I see impact on selling practices, on audit, ability to audit, ability to create content at scale, and so on and so forth. I mean, we are scratching the surface, frankly, right now. We think, for example, I'll give you real life examples. We had a team of about 50 people doing content. We used to spend 2.5-3 crores a year on content, new content, if you will. That team is down to 5, and our content expense is down to 50 lakhs a year. So I mean that's on the content side. I have similar examples on the learner side that we are able to personalize their journey because of AI. We are able to personalize sort of their learning experience. The LMS is a lot more personalized, and so on and so forth. But again, early days, we see a lot of impact on it.
Exciting times, definitely, both in the space and of course to see the rest of your journey. One of the reasons why we call this podcast Founders Unfiltered, we ask this question to everyone. What's one piece of unfiltered feedback that you received that really impacted you personally or professionally?
I think one of the things that, and it happens, these feedbacks come at weird times, or actually maybe the right times. So it happens when we were getting impatient with the business. A year 4, year 5. Sonia had one of these sit downs, if you will, and saying like, is this big enough? Is this impactful enough? Where we're spending, large corporate careers, etc. And I think I remember reaching out to a lot of people and, having a rethink about the business, etc. And I think one thing that, my dad said this, if you will, etc. Is that building businesses in India particularly is a generational sort of effort, if you will, etc. And it takes time to build a great business. And I think while I've heard that before, etc., but actually sort of when you go through the whole experience and you realize that must have been year 5, now we're year 11, we still have a long way to go. So I think it does take time to build great businesses, and it takes time to do the right thing, etc. But if you keep at it, it hopefully pans out.
Any advice for people who are starting their journey today?
Do it quick, do it dirty, but do it.
Love it. Thank you so much, Nikhil. It was a pleasure having you on the show.
Thank you so much.